In this video, I'm taking a look at Fibonacci retracements and extensions. And Fibonacci is a mathematical pattern that tends to repeat itself in nature. If you want to know more about the actual numbers behind it and how they, go about figuring out how the pattern was figured out in the 12th century by Leonardo Fibonacci, there's a ton of information in that. But suffice to say, it has a certain amount of predictive and repeatable presence in the world of nature and by extension, the world of trading. So clicking on the Gann and Fibonacci tools submenu, you can pull up a fib retracement. And a fib retracement is simply a ratio of distance that a trade goes before it runs into a particular resistance barrier. So there are multiple Fibonacci retracement levels. Without a doubt, though, the three most important are 38.2%, 50%, and 61.8%. So what that means is from the drop to the bottom, because you're measuring the entire move here, this swing lower, when it rallies, half of the move will have been collected here. With Fibonacci, you're looking to take the swing and see how far back can we pull before sellers come in and continue to push. And you can see we formed a perfect shooting star on the weekly chart here at the 50% Fibonacci retracement level. It's one of the most common ways to get involved is to look at the 50%, the 38.2%, or the 61.8% levels and look for price action like that to trade. And quite frankly, that's a very simple, straightforward type of trade that you find yourself in. You wait for the price action first, though. As we go lower, you will see traders start from there, and then they'll pull this up, and it's at the 50% again. We got a hanging man here, which was a sell signal, and you continue to go lower from there. Pretty straightforward trading, and Fibonacci does tend to work better on higher time frames. For example, you can do it like on a 5-minute chart, but really at the end of the day, it doesn't mean as much. Another thing is Fibonacci extensions. So you can do like a trend face fib extension on the same move. And this represents the 50% retracement. But then you get these things, these extensions, 1.618 or 161.8% extension. So this measures where can we go based upon the initial move. We've pulled back, we've entered, so we need a place to get out. Based upon Fibonacci extensions, that's the level you're looking for. And we formed a double bottom just below it. It's pretty straightforward. Do you want to stay into this trade? I mean, you could, and it certainly would have worked out. But since then, we've bounced a bit. The double bottom, again, price action, has told you that the move lower is certainly running out of steam. This is a perfect setup, typical type of Fibonacci trading. But there's a lot of other things you want to pay attention to as well. Price action, notice this is $40. Price action tends to form around these round figures anyways. If you go back to the support and resistance videos, remember that I had talked about every $10. So let me go ahead and do this again. So notice that the 50% Fibonacci retracement level is just above $30. $30 is what caused the trouble. We went down to 20, which is what caused the support, basically. We've bounced back here, we've fallen from there again, and we've gone down to roughly $10. So the best way to use these tools is to use the tools themselves because they do have a certain amount of predictive power. And I think, quite frankly, it's just herd mentality. I don't even know if there's any magic involved in it. It's just, it works because people say it works. You have round figures here on the chart, and of course you have price action. So if you can marry the three, this is how you properly use Fibonacci. And you'll see examples of this everywhere. So let's go ahead and see if we can find, let's see what Tesla's got going on. So I'm going to go ahead and use the trend-based Fib extension because it gives us both. We've had a nice strong move all the way up to here. We pulled back here. So let's take a look at this trade. The first thing that you should notice is that we have a pullback as we started to fall. You can pull back to the 50%. And a hammer right there. Well, what else is there? $120. It's a nice round figure. The move had initially tried to move to $200. That caused the resistance. Notice that we made it to the first extension, which is just at about $300. That being said, you can clearly see that there is a symmetric pattern going on here. These are all things that you can calculate. You've got the sideways action of the big figures, you've got the price action, candlesticks, and then you've got the Fibonacci. Remember, when you're trading, you're always better off to have multiple reasons to be in a trade. That's going to be true if you're using Fibonacci or anything else, but that's especially true in Fibonacci because what you want is a confluence of not only Fibonacci traders, but you also want people looking at it for multiple reasons, the round figure. If you remember previously in support and resistance, I talked about needing orders filled. So that comes into play as well. You clearly want nice big swings when you attach your Fibonacci retracement tool to the chart. You want them to be at extremes if at all possible. So this massive extreme here certainly would qualify. And you're going to find that somewhere right around the 38 or so, or the 61, we have bounced and taken off to the upside. Again, you can see how predictive they are, but you don't just put up a fib and trade that. You put up a fib, you hope, and you become more interested in if it's at a place like $50, and then you look for price action. If you get all three of those, then you have a winning setup. It's not a guaranteed setup, but there are enough things going on at the same time to get people interested.